many sights to see. And when I look in my window.
Hello, traders. Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Friday, the last day of April, the 30th, and this is the weekend review. Well, traders, we have finally witnessed that breakout that we've been talking about, looking at all week. Forex Gold currently trading 1180.48. It is trading near the highs. It is up substantially higher, anywhere between $12 and $14 at any given time. Traders, you know that we purchased or entered a long position at 1156 exactly a week ago Friday. We'll talk about placing our stops. We'll talk about a couple of different scenarios. We'll talk about where we see the market going in this upcoming review. For those of you who watched the program yesterday, you know we spent a detailed amount of time talking about Elliott Wave, and the fact is right now we are currently in the C wave. The C wave is the final wave in Elliott Wave theory in which a psychological as well as fundamental shift has transpired, and it is that C wave where Elliott Wave theorists believe the entire market becomes bullish. Let's look at it from the beginning. After markets moved all the way up, you're going to get a series of impulse waves, waves 1, 3, and 5, and a series of corrective waves, which will always be waves 2 and 4. So that in this case, the market hit its top just at 1220, just above there, and you had your very, very first impulse wave. Now, that was followed by your first corrective wave, wave 2, and of course, your second corrective wave is always going to be wave 4. Now, wave 3, of course, is an impulse wave, but it is the impulse wave that has the greatest force and typically the longest range. Wave 5, however, is the last wave of the bearish trend. And you now begin to go into the turnaround. The turnaround happens on wave A. Major difference, of course, is now on wave A, your impulse waves are going to be moving up like this. And your corrective waves now are going to be a correction to the downside. One interesting thing we need to take note, and that is the C wave is believed to have the potential to have at least as much range as the A to 1.6 times the size of that range. And here's where it gets interesting. If our C wave does move 1 times the size, it's going to move up approximately $90 off of a low of 1125. That's going to put it at 1215. If it actually goes 1.6 times, it's going to put us up around 1260. It's going to be an interesting couple of weeks and next month, to say the least. The next technical factor that we really have to pay credence to and absolutely look at very, very closely is our Fibonacci retracement level at 1166. That is our 23% level. And as you can see, we absolutely took that out. We took that out with a fury on the C wave. Now, to recap the trade that we actually entered, we did enter last Friday from the long side, and that was around 1156. Yesterday, we did move our stop up, and we moved our protective stop to 1140 from 1120. We've been keeping this loose. We're going to be tightening that up today. Now, what started us on this entire last leg of this bullish run, of course, was this doji that we found, and that was right in this area here, this one particular bottom. And if you recall, we actually did enter at 1135, However, we placed our stop as the market moved up at 1134. And when we did get this candle right in here, we did get stopped out. We took a loss of approximately $1. The key was finding a place to re-enter once we actually exited this trade a little bit too soon. When we had the following breakout, this pattern here isn't engulfing bullish. We got our confirmation, and on Friday, I did recommend that we re-enter the market from the long side. So, what are our targets on the upside? Where do we think this market might in fact head? Where do we think we'll find support and resistance? If we take a look at the series of moves that we had back as we climbed to the record top, one of the tops that we did receive is right in this area at the 1180, and that's why on yesterday's market wrap-up we talked about that 1180 to 1185 being a first target where we would potentially find resistance. We need to see how it reacts here, if it's going to carry on higher through next week, or if we're going to attempt to kind of cool off a little bit, consolidate. If the market does continue to track higher, my next target is 1190, and that is based upon this particular top right in here. And then lastly, we have superlative resistance, both as a psychological target and a technical target, which is around 1200. So these are the three areas that I would look at if the market does continue to trade higher, if it takes out this one particular resistance area and turns it into support. Traders, this has been the move that we have been waiting all week for. Actually, we've been waiting through this area here, and if you recall, for those of you who have been with us for some time, if we take a look at the bottoms that we've actually tracked and traded, on this particular doji here, we did enter the market right in this area. It was the 7-9 is where we actually got in, and it was based, of course, 1 on Fibonacci and 2 on this engulfing bullish pattern, and 3, it was a very interesting pattern in that this long candle, the inverted hammer, and the doji is known as a unique three-river bottom. This is a belt hold line, and then you had another hammer-like candle. So when I saw the combination of all of those and this engulfed right in here, we felt very, very strong. We did enter the trade. We got long at that point. The other long in terms of absolute bottoms that we did enter was right in here. And this is a on-neck pattern which was created with an inverted hammer. So this was another area that we actually got long. You can always go to our website and go to the forecaster so you can see every single buy and sell that we did. Now, in terms of trailing our stops up, absolutely essential at this point. 1160 on a stop. I would actually go 1159. Protective stop, trail it to 1159. Below these lows, it's a good $20 away from the market, but $20 is not a very large range right now in the gold market. We're having absolute days where we're seeing 20, 25 plus, and I will tell you, if we find resistance in this area, we're going to see some sort of a pattern develop, whether it's a dark cloud cover or a shooting star. As we go into the close of Friday's market, we want to see how this fundamental news is digested over the weekend. Currently, Forex Gold trading at 1177, 1178. Traders, we have waited all week for this breakout. We did get it today. I will look to add to our positions on Sunday, more likely on Monday, as long as we can see it form a base and maintain it over 1170. 1170 right now is that Fibonacci just above that level, and as long as I see that form support, we will look to add to our positions. This has been Gary Wagner for WFGForex.com, your daily market update for Forex Gold. Wishing you, as always, good trading. Have a great weekend. We'll talk to you on Sunday.